Before we dive into that, would like to welcome you all here today. Hello to you, BJ Gary. We've got Kelly, as well as many others in here. Jay Richardson, hello to you and happy Friday. Life in the Fast Lane, Scott, Olga, Will, the Sunset Guy. We've got Austin and others. Hey, great to have you here. I'm joined in the chat as well by my good friend and colleague, Brent Moores, who has been with me this whole time at the company, and I appreciate Brent being here. Brent, 25, 30-year veteran of the markets. Good to have him on board. Folks, any questions, comments you have, those in the chat so we can address those for you. Love to hear what you've got to say about many of these things we're going to be discussing here today in terms of sectors, markets, and ultimately stocks. So with that, let's turn it over to some disclosures to get going here, and we'll dive right on into it. So material here this material is intended for general information and educational purposes only. Now, equity and index options carry high level of risk not suitable for all investors. Spread trading must be done in a margin account. Multiple option strategies will involve multiple transaction costs. Now, I'm not sure we'll get into options, but in case we do, I wanted to list those there. The paid money software application is provided for educational purposes only, and allows users to engage in simulated trading with hypothetical funds using live market data. Now, there is a list of futures and futures options trading disclosures down there. They do involve substantial risk. They're not suitable for all investors. We do just look at the charts here. Wanted to also state too, investing involves risk, including the loss of principal. For some products and strategies, loss of more than the initial investment. Performance is no guarantee of success. If we do dive into dividend stocks, just want to let you know, dividends are not guaranteed to always, be paid. All right, there's a look at what we've got there. And let's just turn it over into our chart here. Looking at the S&P 500, a little bit of a dip, a pullback in the S&P right there. You'd have to say, well, we've seen some dips like this before. Will it end up being more than this? It's a really, really strong move out of a longer term consolidation base, right? We did see that. In fact, let's just back it up before I dive into it. We'll back it up here. We'll pull back a little bit. You'd have to say it was a fairly big run up, and kind of this could be construed as a longer term sort of flag. We've seen a number of these little down days, down days, down days. God, is that a down day? Slightly a down day. It's red. I could pick up on that. But that's about the extent of what we've seen, prices really moving up. You know what? The sell in May and go away, that has not really unfolded, has it? It's been one of those years where we've just kind of broken up higher. I wanted to zoom back out though, just to kind of show you. Well, let's just do this. Let's go weekly. Is it one more? Yeah, it is. There's your 15-year weekly. What would be fascinating, since we are looking at a weekly, if we in our minds would just kind of imagine this as a daily type bar. Let's just say we're looking at a daily chart. Does anybody here see? I mean, you do see it. I mean, many of you will, but it's just like that, that's kind of like a weekly flag pattern, right? There's the breakout. Now, a lot of times, if that did unfold, and we are, in the midst of going higher, kind of tied in to what we discussed exactly last week, where we talked about the innovation and the productivity cycle of technology, and we've seen that in years past. If you guys haven't seen that yet, you might want to take a look at last week's discussion on it. I'll pull it up here in just a little bit because that can help to frame where, a, a lot of the stocks might be heading going forward. AI has really helped, or I should say technology in general, and a component of AI clearly there has been pushing up the S&P relative to peers that don't have that technology component. But just looking at this, I'm just going to throw this out here. This is a flag type pattern that could fit with that sort of a productivity cycle if it were to continue to go like this. I'm just eyeballing folks again, but do you see the distances here in length? We may not, if just for a general sort of a first level target range, I'm just pointing up here approximately 9,000. It might be slightly higher, but we're not even halfway to that yet. And this is weekly. So this does represent a lot of potential upward movement. Some traders might be waiting for the possibility of let's say, for example, a move to the a pullback to try to add to a particular position. For example, that could be something that could be looked at. There was some data published by the government stating that there was $8.2 trillion on the sidelines. That's a very, very big number. We'll see how that does come into play with this. Now, if we take out that component of technology, folks, the EW, we're not even breaking above highs yet. So, the impact of the Mag 7, I mean, Mag 7, of course, but some of those others within the S&P 500 could be playing a key role. By the way, how is the Mag 7 doing? As we're looking at it here, where are you? There you are. That's where we add them all together. This one is actually showing more strength, but this is funny because many stocks within the Mag 7 were kind of lagging for a while, but they caught up. They're not like all tied specifically into AI. Even NVIDIA, which is a component here, which we do want to talk about because there were some details of NVIDIA on that Trump Xi meeting that could open the door for potentially more sales for NVIDIA, more revenues down the road. But that's something we could talk about too. But before we do that, I still want to take a look at our other markets and see how we're doing here. NASDAQ 100 even stronger in terms out of the base there. Again, one could make the case for the potential for a longer term weekly pattern move over here that would coincide, like we said, with that productivity cycle within AI, which is massive productivity, anticipating even being more than the internet or the use of personal computers from the get-go. But we'll see how that unfolds. Okay. Uh, See, comparatively speaking, here's the Russell. It's a little bit above the highs. It looks a lot more like the S&P 500 equal weight. The Dow dollar sign. We don't always go to the Dow, but hey, this class is market and sector, so let's do it. Oh, it's just the dollar sign DJI, not the A in there. What are you seeing there? Do we have the big technology companies in there? Not as much. Now, within that, I mean, we are seeing some moves. Like, for example, here's Microsoft. It's been down for a little bit. This is an example of what's holding back the Mag 7. But if you come over here and you see this move coming up, you're kind of consolidating. Uh, that's a bit of a hold yesterday, I believe, and the possibility of a move here, like a flag pattern here as well. I'm not sure. It's going to be interesting, but that was one that we could look at as well. I did want to take a look at, let's see, the DXY, the dollar, the US dollar, to kind of show you where we're at over here. If the dollar climbs and does show more strength, then what can happen is it can um, be a weakening factor for assets in general. And the S&P 500 is an asset class, right? The companies are. One area just to be mindful of here, I'm going to show you what I'm going to do here as well, but just take a look at 100. Keep an eye on 100. I don't know. This is a weekly, but is it a shoulder, head, shoulder pattern over here? If it did, it could break up a little bit higher. That could put some weakness into the market and create some pullback, some general pullbacks in the market for additional patterns. Now, Scott says software seems to be making a recovery. Interesting. Um, yeah. So Microsoft, exactly. I don't know if you said that before I had noted it, but so left-hand side cut off. I should be okay on my end here, but let me know what you're seeing there, Riceberg. Let's take a look. I mean, one I've been tracking is Adobe in terms of software, but the weekly chart's tough to see, but maybe over here. One thing I'll say about the weekly is maybe for the first time we have yet to begin to make lower lows. I'm just looking at software. There are a number of software companies, but like shoulder, head, shoulder, perhaps. The positive thing here is that it's going at least flat. Even over here, when it looked like it was a shoulder, head, shoulder, it was still making new lows. So software is clearly a lagging component of technology. And you're getting that in the NASDAQ 100, but despite that, the NASDAQ 100 has really been showing, some positive strength. And one of the reasons is because you don't have software, to the point being made about software from Scott, is that software is doing what? At least sideways. So it's not weighing down the NASDAQ as much, I mean, as it was previously, like over here. So That could be a positive, but being mindful of what we could see over here and changes within software as an industry within the technology sector, boom. I mean, why not keep an eye on it? Why don't we just do this? Right click right here and see if for the first time in a while, I mean a while on Adobe, have we ever made a higher high? I mean, it's just like it's really hard to see, to find. There might have been a slight one here, but gosh, that was really just a bare flag, actually. This is more like the possibility of a rounded bottom. So that could help to influence that cycle going higher. I'm just going to do this. Watch it. Take this high right here, which also is noted for this gap. And the gap can be an interesting level of potential resistance as we come up to it. So, but if we could start to break above this level, that could represent a change that we haven't seen in a long time. So right click, create alert here. It does respond to that. I'm just going to say breakout, for example, and you could potentially get text a message like this, but you do have to come down here, say notify uh, mobile, and make sure that that is selected as well. Pull the bar down, send to your mobile device. And of course, you have to come up here to your mobile device and set it up in the first place, which is up in the upper right-hand corner, right? And then what you would do is you would go to application settings and notifications. You could put an email address in. Of course, you can always put in a cell. There's instructions on there to put a phone as well. With that though, because I did mention alerts, it's important for me to just state that alerts are not guaranteed to be delivered or delivered at any specific speed or time frame and should not be used as a replacement for actively being aware of your position. So, yeah, I haven't had any issues with alerts. I do lots of alerts, but just wanted to state that. Okay, let's continue on. I wanted to show you this. Now, we talked about this a little bit yesterday in our class on ThinkScript, which ties specifically into finding areas within technology that are showing well, what they refer to, what the ADX is often referred to as in its own original publication, is extreme trend strength. Now, can that change? Sure, it can. It can vary up and down. But we talked about this a little bit here in that I did want to tap into that ADX a little bit because I think it is interesting. Let me just do this real quick first, though. I'm going to go over here and just highlight the sector grid for all of the sectors as we transition into that. There are really, um, there are two over here, but I'm going to highlight this too. You know, where ours is showing strength on the chart. Real estate has been up. Consumer discretionary has been up. Materials has been holding up. Industrials has been holding up. And generally, energy has been holding up with the price of oil being up. And so too is consumer staples coming up. Financials have been flagging. We're seeing sort of um, a lot of indications of potential strength as we're seeing the S&P coming up. But the question is are they really going up relative to the S&P? And this is really looking behind the scenes to see, is there the possibility of institutional buying occurring here? How do these moves compare to the S&P 500? That's the key point. I mean, that's one of the key points. So we can do this here too. I'm going to come up top and just go right in here to sector rotation. And what is fascinating is we see only a grand total of two that are going up when compared to the S&P 500, which is right down here. So we're using, again, the relative strength indicator. We're dividing it by, its performance relative to the S&P 500 to give us that ratio. The ratio helps us look behind the scenes and see if there is actually behind that quite a different story. It really is different. Look over here with technology. Folks, a lot of strength there. It's moving up faster than the S&P. Communication services, where you're going to find Google and some others in here too. Very similar to technology. Everything else, everything, financials. This was showing like a bit of a flag pattern before, and so too was discretionary. It's down, it's down. Healthcare, horrible. Real estate, horrible. Just horrible. And this was the one that was holding up like a flag pattern. This was the second strongest one, but now we're actually, relatively speaking, somebody might be exiting these positions. Utilities, even well, Utilities breaking lows. Wow. They're exiting here. They're going into just two. So that is very, very interesting information, all else equal. I'm going to share this now. I think most of you have it. But, and by the way, if you're watching this on the recording, I'll always put this in the description section down below. We'll share this grid. It is not a think script, but I just wanted to state this is just charts. But if I do share a think script, think scripts are not guaranteed for timeliness or accuracy. Um, and yeah, it's not a think script, but there's a code within these charts. But we're just basically just sharing these charts. But anyhow, wanted to state that, and here you guys go for sector rotation potential. I'm going to put this rotation potential. Remember what we said too? That's the link right there. And by the way, there was a question yesterday that I missed, but if you are new for the first time, go over here. And if you want to just take that link, copy it, go to setup, open shared items, and just paste it right in there. Click preview, click import. And when you import it, you'll then be able to find it in this box right below on demand. And it will be down in here. Just name it what it is. I mean, name it something you'd recognize. Wiley says Island Bottom. Yeah, I think that was coming back to the Adobe, right? That was kind of on the Adobe side of things, the Adobe chart itself. I did want to take a look at that, but where is Adobe? This, by the way, is one maybe a little bit of a late comer to the technology. I mean, we're just breaking above the range right now in AVGO. Will it go higher? That's the question. We don't know. Many of these still have earnings right down here as well. But yeah, Island Bottom. I'm going to check that. Maybe I missed that one. Good catch. Oh, there actually is. If you include today. And we won't know for sure about today until the day is done. But if this gap can hold, that's a good catch. See that? That's a gap down and a gap down right there. But notice when you get, well, I'm sorry, a gap up. So that right there is the island itself. And those, I mean, we're starting to see patterns within the possibility of a longer inverted pattern, which ties back to Scott's point on software. So something to be mindful of there. A lot of things to be mindful of here. Oh, yes. By the way, the first chart, I'll share this one. I didn't do that. I'll make sure I do. And again, this will be in the description section down below. But these can be helpful, but they're not always as helpful when you're comparing them to the actual underlying market itself. It was the sector grid right here. Oh, that is it. Sorry. Let's go down to it and share that grid. And I'll just paste this down here. So share and then sector grid. Okay. Grid. Okay. There you go. All right. Those two we've got in place. A couple more quick notes just on the market before we dive in. See how we're doing on our comments here. All right. Yep, Brent gives credit to our producers. Absolutely appreciate those guys as always helping us. Couldn't do it without them. That is for sure. Okay. Yep, there are a few different notes in here. Carrying the home market. Well, in many cases, yeah, that's a good point. Kelly, is it carrying the home market technology and communication services? Just a quick note too, while we're talking about that, if I just come over here and I just say communication services, so jumping right back into S&P 500, it's not a big group. I'm going to go ahead. Now I'm just going to pull up all those stocks that represented each of those charts. We do this all the time, but under industry, you're going to recognize a couple of the big names in here. Communication services. There it is. Let's scan through it right there. Okay. So the big ones that could be playing a key role here that have big market weighted market weight to them as well. There's your Google, right? You've got Google in there. You have, I thought we had some other big ones. That's really the big one I think that carries a lot because it is market weighted. We'll see it stick. You've got the A shares and the C shares combined together. That's the biggest of all. What stock has the biggest impact on the S&P 500? Because we are dealing with market weighted. Also with the NASDAQ, it would be Google Alphabet, right? Right there too. So oh geez, yeah, huge. Well, they're all kind of big when you're just in the S&P 100, excuse me, NASDAQ 100, but still pretty big impact there. So that's an interesting point. There are ETFs on the market. We don't talk about ETFs here, but there are ETFs in the market. Sometimes traders will use those as instruments. But if somebody was anticipating Google really going down big, it could have an impact on the market. Collectively, the Mag 7, like what, roughly 40% of the S&P 500, accounting for its price. So those two are intertwined. They can give us some insight into the market, et cetera. And just back to that note real quick, as we look at the market, as we see the market, and we talked about the possibility of, hey, there could be a longer term, because that's a really strong breakout here, could be a longer term move in play. Well, if technology like the Mag 7 contributes 40+% of that move, do you see what I've outlined here? This flag is even easier to see. And by the way, it's on a shorter term basis. So if this continues to flag higher and like the Microsoft start to kick in gear, boom, 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 we could fly up a little bit higher. I mean, it could help. It could help the market move up, right? 40%. Now, it doesn't guarantee it, but it could have a few different things. Okay, the difference in the two sets of charts, Journey says one is relative strength. So those are all compared. They're using the relative strength indicator. I'll just show it so you can see it again real quick. So each one of these, I'll maximize it right here. The other ones are just the chart data, the price data themselves. But behind the scenes here, everything is compared on relative strength. And so if we break this down into relative strength, you can see we're taking the S&P 500 and what we're measuring it against, which is a sector within the S&P 500, that is the relationship right there. The close of the security, in this case, the sector, divided by the S&P 500. How is it performing on a more minute scale, relatively speaking? Is it stronger on stronger days on the S&P? Is it up on weaker days? Is it holding up better there too? So good question, but that is the breakdown of it right there. Okay. Well, yeah, on the S&P, I think we got that. Oh, let's see. It's basically Google and Meta. Thank you. So I missed Meta in there. Nice catch, Kevin. It's good. All right. Let's do this. There was a meeting, as you guys are well aware of, we talked about this, between Trump and Xi. Now, there were a couple of things that came out. Let's go back to the S&P 500. We're going to move around to a couple of different companies. In fact, let me start off with, speaking of some of these companies, NVIDIA was one of the companies that was brought up. In fact, Jensen Huang did go over there along with, gosh, there must have been more than a dozen executives of big companies. What happened is he was running late for the meeting and he had to take a flight on Air Force One from Alaska to get over there. But anyways, that's totally a side note. But the thing is that uh, NVIDIA, what I'm hearing is that they are now opened to being able to sell to more Chinese companies, and more importantly, to kind of get their format in those other businesses so then they can grow on it. So in other words, they might be more reliant on NVIDIA going forward. That could open things up. And you could see that this is one of the companies that did move up on the news, but of course, technology is down a little bit. I want to go through a few different highlights on that as well. By the way, did you guys remember back in March, they did announce a share buyback as we dive into some of the stocks here too? There was a share buyback that was announced over here. That can also be a catalyst at times to get the company going. We haven't had that buyback yet. I just bring that up because you've got earnings right over here. Um, I will say this, we were sideways for the longest time on NVIDIA. So even though earnings were going up and up over here, the metrics in terms of like price metrics, valuation metrics, they were starting to improve, because if earnings go up and prices stay flat, sometimes you can get a bigger breakout. Sometimes, if analysts see it. But like I said, catalyst with the buyback. By the way, notice this. This is a really strong breakout above the range. It had taken a while to do it. And then we pull back here. Look familiar? If we just dissect it right back towards some prior highs. We're very close to 200 before we bounce up again. Now, if we were to consolidate maybe again through here, could this be construed as another flag based upon this meeting out there? Okay, between Trump and Xi. All right. That would be something to consider. I just wanted to hit this one. I've got a couple more to discuss there, but I thought we were kind of expanding a little bit on the Mag 7. So I just wanted to hit this. This could be one of the performers that could help to lift that flag pattern on the combined Mag 7 higher and help influence the market higher as well. Okay, let's hit this. Let's go to our market posture. And sorry, not market posture, but our market sector review. Want to hit a few points over here. I did see that we did get a potential driver coming in here with the McClellan oscillator, an oscillator that was built by the man and his wife himself. And it was a tag team group, but it has been very helpful. It does reference the New York Stock Exchange, and we're looking at momentum between a couple of different moving averages in terms of advancers, decliners on a much bigger basket. So it gives us kind of a breadth indication, but also with breadth, momentum. And that's what makes this unique. How to read this or how the individual that created it has mentioned it, that we've talked about, because we waited for this to maybe get into another buy area for a while. Once you get below minus 100, okay, which we are right now, we'll see where we close on the day, but we might. And then you get back up above minus 70, which is just above that red line. So then minus 70. This indicator, the way that has been mentioned, that would be a 2 to 3 week rally at least, is what they say. Now you can go back and check this. It has played out a number of different times in terms of rally. Again, we're on the daily chart, so you're seeing, this time frame in effect. This is a pull. Notice this. It can be a very, very minor pullback, and there's your rally right here. Would this be the flag? This could be a fun one to keep an eye on just to see what unfolds over here. Advancers, decliners in general, though, holding up, holding up. It's curved a little bit. It's curved. It didn't make too much of a new high, slightly, but then we kind of curved over. So it's really a breadth issue. There are a number of stocks out here that are not doing like fantastic in the market too. Um, Retail is not doing awesome. We looked at the SPXEW. I'm going to show you that what's not doing great here in just a second. But look at this over here. We made new highs, so we're kind of past the Hindenburg Omen for sure. We did get a few spikes a while back. Notice over here, it's a small basket of companies that is leading the market higher. 46 new highs in the NYSE. Any idea what some of those might be? Well, technology. We see that on the chart. S&P 500 just hit a new high yesterday, right? And we know what's powering that. Okay. In terms of, gosh, seasonality, we bounced right back, didn't we? We came back with seasonality, and maybe we will see strength all the way up through July. It'll be interesting to see. This is just comparing in blue what we've got this year. That's our chart on the year. But then how does that compare to the average of the past 10 years? Well, that was the dip, and we talked about the dip, and then we just recovered very, very sharply. Again, we know what's behind some of that too, right? As we look at it. So let's do this. I'm going to show you this before we dive into more of the Trump-Xi announcements for some additional stocks that traders might keep an eye on based on those announcements. But here is Nike. 12-year new low on Nike. So kind of interesting, Nike, because Nike is really was a growth stock, and now they're just trying to turn it around. That's the weekly chart on it. Hard to imagine, isn't it, that Nike did that, but it is there. I mean, it did happen. We've got another one very similar to it. I sent a couple of tweets out on this. Here's Lulu. Guy, that one really, you're down. That's 2018 levels. So again, this is like, okay, inflation doesn't help this. at all, but also competition. There may have been some impact with tariffs as well on these, but yeah, this was, I mean, Nike was down 75% from its high. This one has a huge dip as well. I think it was down, wow, well, I didn't know it was above 500. Now we're about 125. So, whoa. So there are some just referencing that breadth that we're seeing that are not making new highs, but are making, in fact, new lows. And these are bigger names as well. Folks, if you're getting value out of this discussion, we have on Fridays to kind of encapsulate what's been happening during the week in the market. We're still not done yet. We got to talk about the Berkshire Hathaway meeting and the rest of the Trump Xi meeting. But smash the like button. It just lets us know that what we're presenting here to you is of value. And be sure to follow us as well. We just reached 197 thousand subscribers here on our Trader Talks channel. Love to have you on board. If you're not already, just click the playlist. You can get some great topics here. There's one from Brent there. Portfolio hedging, demonstrated, fascinating stuff. Another one down here he's got, and others as well. So you're going to get the coaches down in this group. Encourage you to take a look at that if you're not already subscribed. In fact, I'll just put this link down here as well for you all. Okay. Brent has also posted our X handles. Be sure to follow Brent at Brent Moores CS, Mike Fairborn CS. Okay, back to our discussion here. Now, did you guys see this on Boeing? As we break down Boeing, Boeing dipped a lot. Now, I didn't know. I'm like, I heard that China agreed right now to put in a purchase order, right, for 200 jet or planes. And I thought, why is it going down? Well, they thought that order might be 3 to 500. Now, I did hear the president speak yesterday because I was talking about this. He was talking about this, and I was curious as to what was happening here. But he said if these 200 jets go, or planes, jets go well, then China has agreed to 750. Now, did that slow us down today? No. In fact, we're still falling. Now, could there be some support through here? Perhaps. But this was one that was noted specifically by the administration to potentially be keeping an eye on, perhaps. And behind the scenes with that, GE, is it GE Aerospace? Yeah, it is Aerospace. This is the one. So they make the engines behind the jets, the Boeing jets, and this is that's like a core component, and that's like, you know, obviously funding, well, it would be revenue to this group as well, but it's down too. So this news is not actually playing out. I really don't have much to say. Like, hey, they made evidently some sales, but they both decided to fall. So, but maybe they could hold up down the road. I'm not sure, but that's some weakness. Let's turn to BR, since there's nothing to look at there right now. BRKB, Berkshire Hathaway. Okay, the meeting occurred, I think it was the second. You can still find that online if you want. The meeting's like 5 hours long, and I have not finished the meeting. But it is interesting. It came right there. We did kind of bounce off the meeting, you could say. There were earnings that came in. They have a record, and I've always found this interesting because it can give us guidelines as to, you know, maybe what some of the fund managers are looking at, et cetera. I want to tell you also just references because this is something that you guys can tap into as well. What their top holdings are, what they added to, what they cut, etc. You could find something like that on Schwab.com, but it's not a recommendation. We'll just dive into it in a little bit here. But they have a historical record of 397 billion in cash holdings right now. That's the largest ever they've had. And I just did it like a little interesting study on this. Now, they may be getting more on that money than 3.75%. But if they were getting at least 3.75% on that 397 billion, they are making 14.9 billion annually, and that equates to about 40.8 million a day. That's not bad. I mean, those aren't bad numbers. That's kind of a good situation, all else equal, if you have that kind of, you know, sort of a cash holdings. But that's like, you know, what is it, 365 days a week? So those are some big numbers there, but they've elected to wait on some of those. Now, I did make a note on my side here just to kind of highlight some of the companies. I just want to pull up the chart so you can see them as maybe some indications of what they might be looking at. They did add one company, which was NYT. Again, not a recommendation to buy, but we're just stating what they have, well, what they added that you guys can take a look at because that the company has to report these. But their latest filings, they had NYT. They had this is the new one. They added to CVX, which is an oil and gas company. Obviously, they added to that to the tune of about 8 million plus shares. CB. This is Chubb. This is an insurance company. Kind of a sideways channel, somewhat like CVX, but of course, CVX is going to be heavily influenced by oil. CB, they added just under 3 million shares. They added to DPZ, which didn't go so hot for them on the last earnings announcement. This is Domino's Pizza. Interesting. How does that look on a weekly? Well, maybe at 300, there's something there, but boy, that sure rounded over quick. But they added to this position to the tune of, oh, this was a much smaller addition, about 368,000 plus shares. And this is also an addition, but they only added 300 shares. So take that as you will, but there's Lamar, big advertising company here is Lamar. Okay. So it looks like that's a REIT. So let me just quickly state over here so we're clear on this. There's a little bit of a little note on REITs. Investing in REITs may pose additional risks such as real estate industry risk, as well as interest rate risk and liquidity risk. Just wanted to highlight that because it is a REIT. We did mention real estate earlier too. So there you go. Now, did reduce a number of positions. Let's just hit some of the bigger ones. Now, I don't know if this is going to go Amazon. They did reduce this position. You can see that we do have in our paper money account an outstanding order on Amazon right now. We have just for a paper trade, they did reduce Apple. They reduced Amazon by about 7 million shares, 7.7. They reduced Apple by about 10 million shares. And BAC by, this is all in alphabetical order here, Bank of America by almost 51 million shares. I'll just hit like the top three. They reduced also AON and they reduced Pool. Pool is fascinating. This is Whirlpool, right? I'm pretty sure that let me just double check. Whirlpool right here. Yeah, I think it is Whirlpool. Anyways, I'm just scanning through it real quick, folks, to see. I thought it was Pool. I'm pretty sure. Whirlpool? No, I don't know. Maybe it's not. It's different, but boy, it's really taken a big hit as well. They did lighten this position up by about 390,000 shares. Anyhow, look at that. Wow. Folks, if you ever said to yourself, is it important or is it helpful to follow the trend? Sometimes it can be reflective of a financial situation, right? Earnings pretty much down over the last 2 years on this company as well. But there you go in terms of Pool right there. So I wanted to hit that. So we look through some of these with you too. Oh yeah, it is Pool you swim in, it looks like, doesn't it? Yeah, it's not Whirlpool. What is Whirlpool? WHR? I don't think these guys have been doing okay either. Well, that is Whirlpool. Yeah. See, almost the same chart. There's something with the term pool in it. I'm kidding, but look at that. That is down to the trend, lower lows and lower highs. Yeah, it seems to kind of be something there to be mindful of. This is the one. Oof, see that downward trend? I'm just tapping into earnings here and looking at the actual earnings can be quite helpful here as prices, folks, have been really hit. I mean, some people like a value, and I had been really a big player. I mean, early on in my investing where I was always looking to try to gain something from it in terms of, hey, maybe I can get a good value here that will turn around. But this was a really interesting kind of a rounded bottom until earnings came up again. A lot of times on those rounded bottom, you may want to get past an earnings announcement, folks, before you decide to dive in any deeper on something like that. Just get past something like that. Hmm. All right. And as I'm waiting on that, I want to pull up something here for you guys as well. Oh, sorry, just one second. Oh, dang, and that's what I did wrong. Okay. I want to pull up Schwab because I want to highlight as well. Some companies have come down, and we look at in this class sometimes dividends. I wanted to pull this out and show you a couple of different indications. Just looking at a Schwab demo account here, one really cool search that you can do just in the demo account here. If I go into the research section and I come down into stocks, I think many of you have seen this previously, but if you go into stocks, you can go into the stock screener and we had talked about valuations, and a lot of times with the valuations, investors are trying to capture a higher a dividend that might, also have the prospects of growth as well. An interesting way to do this, maybe, that you can kind of piece some of these together. Um, a screen like this on some of these that might, some investors think they might bounce back. I'm just going to look at the S&P 500, that basket first of companies. Let's scroll over to the left-hand side under valuation, and I'm simply just going to put in here the PEG ratio, right? That compares PE to projected growth going out. So if, projected growth, G for growth. If the PE ratio is 20, for example, and the projected growth is 25, folks, that PEG ratio, this is the PEG, is going to be less than 1. So that's going to be less than 1, meaning you might be seeing the value here. Projected growth is even more than what people are paying for the earnings of the company right now. It's an interesting, quick little indicator that compares two extremes to each other. Cheapest, but also having some growth. So look at that. You've got a -1. You've got 39 companies in there. Now, what some traders will look at to try to help sweeten the deal, they might just say, well, what's the dividend yield on something like this? What is the annual dividend yield right there? And we're just going to pull it up and we're just going to take a look at these matches right now. Because remember, I do want to take a look at every discussion we have here. I like to reserve the last little bit of time uh, for dividends too, and just investing in growth, some of the growth stocks too, as we've looked at the market. But come over here and we'll just take a look at the annual dividend rate. Click it one more time, the highest to the lowest. Now, what's interesting here is this is just below 1, but we can pull up and also look and see what those growth rates are relative to the PE ratio. That can be added over here too. So some areas within the S&P 500 uh, may be presenting growth plus value plus a dividend. Does that make sense? So I know we've been speaking a lot about NASDAQ, for example, being so strong and technology companies. But on the other end of the spectrum, I think there are some of you that look for bottoms as well, maybe with dividend yields and growth rates combined. But a search like this, right off of Schwab, could present some areas that you could look into, for example. So just wanted to highlight that for you. And of course, you always want to take a look and just see, do you believe in that projected growth rate? But it is a combined basket. It is projected, so it hasn't happened yet. But there you go. All right, I wanted to talk about that, folks. I didn't get a chance to go into um, our class that we talked about yesterday. But if you did want to take a look at it, I was going to talk about actually the ADX because we are seeing some really interesting strength signs with the ADX. I talked about that in this class right here. Oh, I have it in the title as well. But if you want to check it out, it's something you want to dive into. It can give some indications in terms of trend strength when stocks are breaking above that ADX 25. We've got a a scan in there too if you want to take a look at it. But here it is. So here is class at the top. All right, everybody. Hope you have a fantastic weekend. Again, if you got value out of this presentation, smash that like button. Appreciate Brent being here as always and his help in the chat. Oh, there we go. David says the PEGI. That's right. You're looking at the PEG ratio plus that dividend. He's got it. All right. It's an additional component there. All right. It's great being with you and appreciate the discussion in the chat as well. You guys have a great rest of the day. Good weekend just around the corner. See you next time, all.